Of the London session open. My name is Alejandro Zambrano and I'm the Chief Market Analyst here at TradeCaptain.com and Amana Financial. Today we're using a new background. You can even see my face and well, a bit of my office as well. And it's a new thing. We're going to see if it works out. It's quite a lot of heavy processing going on in the background with all these videos and images in the background, but we'll see how it works. Hopefully it won't be too really interesting, as you can see on my chart to the left here, and very close to breaking 115.09. So we're going to talk about that. We're also going to talk about Bitcoin, crude oil, gold, and a bit about the DAX 30 as well. And if you have questions, just put them in the chat box here on in the live trading room, and we'll address them after the main presentation. Now, before we start, as always, I need to stress that trading financial markets, unfortunately, is high risk and we may lose all of our invested money. About 79–80% of people lose money when they trade, and obviously we want to avoid that. So one simple way of reducing the risk of that is trading with less leverage. And I'm quite confident to say that with the new ESMA regulations in place, it wouldn't be surprising if at least, say, 60% of traders are profitable. Much like what we have seen in places like Hong Kong and the US, where leverage has been lower. They raised to the left, so just give me a second with that. And there we go. Did a lot of this clicking this morning to get this sorted. There we go. We need all 4 digits. Good. So, in regards to the euro, as you can see right now here, the market is trying to trade below 115.09. And if it manages to do so, we would once again break to the downside. And this could potentially cause the euro to target the 113 level. It would be interesting because, you know, we did try to break the upside just recently and that did not really work out. And now we're testing the other side and it went really, really quickly. Obviously, what I did not foresee at the time was the situation in Italy and how that would influence the markets. It's a lot about Italy, a lot about Italian stock markets and bond markets and their budget, where they're looking to spend, I think, twice the amount from last year, and that is worrying the markets. Now, technically here, the way I'm going to treat it is like any other breakout. On a close below 115.09, so say a close at 115 by the end of the day, I'll turn bearish from that level and I'll remain bearish as long as trade below today's high. That will be on a break. Say we trade out to 114.98 or something like that. So then I'll be bearish just below today's high. Now, there's no right or wrong here. There's no sort of there's not like a strong rule. Some people say wait until the end of the day for the breakout, but the problem is if you consistently do that, at least nowadays, you will miss out. So what I do sometimes is I just sell in the breakout, put stop loss on the other side, and then I'll see where the market closes. And obviously if it closes within the range, you have a reversal candle, then you can take that as a sign to get out of the market, and ideally for maybe half of the risk applied. Or you could wait with the risk of losing out. I can tell you right now, I'm not going to trade this one directly. I'm already I'm already long the dollar, not via gold anymore, but via another market. So I'm not going to jump into this one straight away. I'm going to observe and maybe I'll change my mind, but I want to see how it closes here, because when we reached the lower end here last time, I thought we were going to head lower. I did some money on that, and then we moved to the upside, and this was pretty much a break-even trade. So the market has not really been behaving the way I anticipated. And usually when I try to force something, I just get in more trouble. Here's a market that got me today now in a little bit of trouble. This is the price of gold, and I shorted on the break here, more or less at 11.87. With a stop just above Thursday's high. Now, the market moved upwards on Friday, which is fine, and then yesterday it was moving lower but did not really manage, and then today is pushing upwards and it spiked above Friday's high. So I actually decided to get out of my position, and I just got out of it, and for a loss of about 1%. because usually when we break out of a range, it goes really quickly. A good like a good explanation of this, or like a good example, sorry, is this. This is Brent crude oil, and I bought the breakout here, and yeah, bought the breakout and immediately went into profit. A few days later, I booked some profits here, and then when we took out the high, I actually bought again on the 27th, and yesterday not yesterday, but on the 28th, so Friday, we moved upwards, and then yesterday we had another bullish day. So in total here, I bought here, profit here in the middle more or less, and then bought again, and then profit here again. The key point is here though, it's not the way I traded it, rather the fact is that when you have a breakout and it goes quickly, that's a good sign. When it spends time, like gold, it's a bit of a warning sign. And I have been given the opportunity to reduce my stop loss to Friday's high, sorry, and I did that, and I got out on the back of that this morning. In the case of Brent crude, I actually got out yesterday, so in total from the breakout here and here, a total profit of about 7%. So my account just reached a new all-time high yesterday, up, I'm actually very surprised, about 59% this year. I'm using a new strategy which definitely has helped a lot, and I'm trading with slightly more risk than usual, but yeah, 59% up this year, so looking really good as the year will end in about 2 months from now. About US oil, well, we added, so we talked about this, and this is the main market I showed you guys. As it a break to the upside, will lift the market higher, and we reached these levels. And if I remember correctly, yesterday I said this is probably a good spot to book at least 50% of the position that we talked about here. Unleveraged from the breakout level, I've been up with about 6.2%. So even, I guess, if you traded with a low amount of leverage, so 1-to-1, I guess you would have had at least, maybe 6% return or something like this on this market. And that's nothing to, and that's actually really good. It's a really good opportunity to, again, capture some profits here. And I think here, going forward, we're definitely on the other side. This is definitely not an opportunity to buy as well. But I think if we pull back a bit, maybe to 74, I think traders are probably going to look to get involved here. And for now, there's no reason at all to change the bias as long as straight above 72.91, which is this level down here. I think we might go down a bit and then potentially head upwards. Now let's talk a bit about the pound today. So this is the pound versus the USD, and I've been showing you this for the last few days. So as you might remember, we're bullish here. We got this initial move here, right? And then at the end, we got stopped out here on Friday, September 21st. And since then, after that, I would be neutral to bearish this market. And things are moving in the direction I anticipated them to trade. So we had that corrective move and then lower. And the reason why I didn't think this was going to work is just because of the risk-reward ratio. At the time I said, we are 182 pip away from the closest support and about 337 pip away from the further resistance, about 200 pip away from support and about 400 pip away from, I'm doing it the wrong way today, 340 pip away from support and 173 pip away from resistance. That's not a good risk-reward ratio. A bit like crude oil. Now here, the last few days, I didn't necessarily communicate that to you guys, but I have been saying to some clients that we want to be selling up here around 131, and we're heading now lower. I don't have a very strong view on this, but I think we'll continue to trade downwards, and I think if we do maybe trade up to 130.50, 130, I think traders will try to sell, and I think this trend defining level can now be reduced to the high, and this is the high of September 27th. So we covered euro dollar, we covered crude, we covered pound as well. Let's take a look at the S&P. So this is the S&P, and I remain bullish above this level as I have been over the last few weeks. We took out this level here, which is an indication of a resumption of the bullish uptrend. We're now back into the middle of support, and I do suspect that the market should potentially be able to bottom out in this little region where we are right now. And obviously, if you look at this candle, is bearish, so there's no real signs of this bottoming out. But keep an eye on this, keep an eye as well on the NASDAQ and maybe the Dow Jones. When they start to pull back enough, maybe with the opening of the US market, you might see this market bottom out here. Obviously, if you're trading on the back of a 4-hour candle, you get in a bit late, but maybe with a 1 hour or something like that. In regards to the German DAX, interesting setup. I shared this in an article yesterday on Trade Captain, and the whole structure, we're stuck in some sort of a wedge. And not only that, well, the wedge breakout level is the September 27th high. The wedge predicted that reversal and take out this level, then we complete the wedge. But what is also interesting here is that if you look to your left, you have potentially a left shoulder, and this will be the head, and this will be the right shoulder. So we're trying to bottom out here at these levels. And you know, if we take out the high, then we'll trigger that inverse head and shoulders pattern. Difference between the head and the neckline suggests a 671 point move. 761 point move from the September high takes you up to the 13,139 level. I'm not going to be jumping long here on this one because bullish US stock markets. I think you'll probably find better value here. But you know, one might consider this one as well. Right now, though, we haven't really reached any of these levels, so technically we're still bearish below the September 27th high, and this market may go to the downside. Now, what we want to see ideally is that we go a little bit lower, maybe to 12,100, but not much lower, so we keep this head and shoulders pattern relatively symmetric. Next market is going to be Bitcoin. Let's see how Bitcoin is doing today. So this is Bitcoin, and there's not much happening here. It's been quite a boring market, and as I've been saying over the last few weeks, ideally a break to the September high turn things bullish. Alternatively, we trade below the June low at 5,786 and things turn bearish. The first sign of the market bottom out will be a break to the September 22nd high. That could be potentially an early entry here, but the rest of the markets are not bullish. So with that in mind, I would be careful having a very strong view here on this market. Okay, let's see here. Do we have any questions? Okay, so Mauricio's telling me that you're having some issues with the streaming. Okay, good. So that sort of proves when we have the issues here with this video. So we're trying to use these cool background images and the video and everything, and you guys are reporting that we're having a bit of an issue. So I think I'm gonna review the output myself, and if it looks bad, I think we'll just revert to the normal presentation style. So charts with no background and things like that. Okay, I don't think we have any questions, so we're gonna wrap things up. So just to also mention a bit about my positioning, I got rid of that gold position for a loss of about 1%. I bought some dollars in other pairs. Technically, I'm just holding one position right now. I might get involved with the euro, but in essence, sort of what we're seeing right now in the market is a bit of dollar strength, and that's what I would look for across different pairs. Okay, have a good day, guys, and I'll see you guys tomorrow at pretty much the same time. Thank you.